Namaste and welcome to our first webinar here at QuickTake for 2021 at Global Wonks. I'm delighted to welcome today Marko Papic, Partner and Chief Strategist at the Clocktower Group, who's going to be talking today about themes from his very well reviewed and supremely insightful book, Geopolitical Alpha, an investment framework for predicting the future. Before I hand it over to Marko, I do want to remind you that if you have any questions, please use the Q&A tool at the bottom of the Zoom window to ask your questions. We'll switch over to the Q&A section of the quick take over the course of the last 10 minutes. And of course, if you want to get in touch with us about any future webinars or our products here at Global Wonks, please get in touch with matt@globalwonks.com. Marko, over to you.
Super. Thank you so much, Bilal. Thank you for the invitation. Thank you for the opportunity. So I'm going to crush through 5, paradigm shifts in the next 15 minutes. So we're going to do this really quickly. And I know the title of sort of the series is How the World Has Changed from COVID-19. I'm actually not sure I would be talking about different paradigm shifts if there hadn't been COVID. So that's something that I would emphasize here. These are really structural secular forces that I think were underway even before COVID. But I do think that COVID-19, and you will be able to kind of articulate this as I present the views, has probably accelerated most of these paradigm shifts. So let's dive right into it. I have some slides here for everyone. One little caveat also before we begin. I technically, I use geopolitics and political analysis to predict the markets, mostly in the public space, a little bit in the private space as well. And so some of these forecasts might seem a little bit strange to those of you who are not investors, maybe who are running real businesses or who are trying to, better the world through think tanks or international organizations. So just bear that in mind. I'm always focused on the markets. That is my ultimate end goal, is to predict the politics in order to get the markets right. And that said, the first paradigm is something I call the Buenos Aires Consensus. So what is the Buenos Aires Consensus? Well, it's just a catchy term that I use to describe the transition from what we have had over the last 40 years in terms of economic policy, broadly designed. We call Washington Consensus basically the macroeconomic context that has existed since about the mid-'80s. And it has to do with things like laissez-faire economics. It has to do with prudent macro fiscal policy, things like counter-cyclical fiscal, orthodox monetary policy, privatizations, independent central banking, deregulation, and free trade. Everything that's really been a hallmark of Western economic policy for the past 40 years. I think that that's over. The Washington Consensus is over. It was called the Washington Consensus because the IMF and the World Bank, the two institutions, propagated it around the world as best practices. And I think that we're going towards something different. Why do I call that something different, Buenos Aires Consensus? Yes, because I want to make investors kind of wake up and realize we're headed asymptotically towards Argentina, not fully, just asymptotically. And it really has to do with the median voter in much of the Western world, but in particularly in the US, moving towards the left on the economic spectrum on a secular basis. So this is one of my favorite charts. As you can see, this is not about COVID. This is a long-term trend. It's a chart that goes back to the 70s. It's basically a net preference for small government over big government. Essentially, it's a Pew Research poll that's been held since the 70s. You just go preference of voters for small government minus big government. As you would imagine in the United States of America, for the most of the 90s and 2000s, this is a country that doesn't like big government policies. But since the election of President Trump, but even before that, there was a secular trend towards big government acceptance, if you will. Normally, when a Democrat wins the presidency, there's a little bit of a bump in support for small government. Usually Republican voters are more comfortable with big government when their president is in charge. That's basically what this chart tells you. I'm not sure that's going to happen with Biden. I think there's a secular shift towards this sense that government does have a role in the economy. Whether you're right or left on the political spectrum, the median voter is moving to the left on the economic side. Now, why is this important? Well, it's important because we've had an extraordinary amount of fiscal and monetary policy support thanks to COVID-19. Now, you can see that on this chart. you can see just how gargantuan net government borrowing increase and Fed's asset program expansion has been. So the yellow line is basically monetary policy, purple line is fiscal. It dwarfs what happened in 2008, which you can see on this part of the chart here. 2008, we had a little blimp where both monetary policy and fiscal policy were coordinated and simultaneous. Since then, over the course of the last cycle, monetary policy and fiscal policy almost acted as guardrails against one another. When we had austerity, we had QE. When we had stimulus under Trump, we had QT. Now, I think this cycle will be exemplified by a coordinated monetary and fiscal policy, not necessarily because we have a pandemic and it's an emergency situation, but because policymakers have been primed by the median voter to basically be more left-leaning, broadly speaking, on both. I think this is probably the most important paradigm I'm going to talk about. You know, pendulums swing on economic policy over a course of decades. In the 1970s, the US had much more pro-cyclical monetary policy and fiscal policy. That swung with the Reagan and Thatcher revolution in the 80s. Now it's swinging back. And I think this is very significant for the US dollar, which I think is in a bear market. It's significant for commodities, which as a consequence will be in a bull market. So for the markets, this is the big deal. The second thing is the irony. The second paradigm I want to talk about is this irony that there are still pockets of Washington consensus in the world. There are still large economies that are eschewing this sort of populist macroeconomic policy on the fiscal and monetary side. And the biggest irony of this is that China is the last Washington consensus economy in the world. As you can see on these two charts, since COVID-19, the PBOC is a central bank that has basically seen the least balance sheet growth out of all the major central banks. I mean, dramatically so. They basically haven't done anything. And on the fiscal side, if you look at it on the right side, the purple bars are fiscal expenditure since COVID. The gold lines are 2008 to 2009, so post GFC. Notice the West. Basically in the West, there's this view amongst policymakers that what didn't work last cycle was austerity. You know, we messed up. We applied it too quickly after the GFC. In China, it's the opposite lesson that was learned. In China, you can see it here on the corner. They have stimulated basically about half as much as they did during the GFC. There are a slew of reasons why this is happening, including their focus on domestic deleveraging and reforms, which is still there, even after COVID. And I think it's important because it also means that there will be a persistent yield advantage in China as policymakers there refuse to basically stimulate as much as we have in the West. You've already seen this in 2020 in speaking with institutional investors, large sovereign wealth funds, large pension funds. The number one trade, the number one investment of interest was Chinese bonds. Let me just pause, think about that. In the midst of COVID-19, in the midst of the worst geopolitical rivalry between the US and China, in the midst of a slew of Trump administration sanctions on investing in China, the number one investment of interest for large pools of capital globally was investing in Chinese debt markets. Now, that actually leads to an interesting third paradigm, which is I think also I think will be controversial for this talk, especially since I have 30 seconds to defend it. First caveat, I've been doing this for the past decade, doing political analysis for the markets. In 2012, I made a very controversial forecast. I said, look, forget about the Middle East. The Middle East is none of your concern as an investor. Arab Spring, the Islamic State, it will have zero impact on the markets. The Islamic State conquered Mosul in May of 2014. Guess what happened to the oil markets subsequently? They basically collapsed. So this forecast was correct. My point was that the geopolitical risk would rotate out of the Middle East to East Asia. Now, I'm not just saying this to pat myself on the back, although a little bit that too, but more to tell you that the time to forecast US-China tensions was 10 years ago. They're here. They happened. Extrapolating this now linearly, extrapolating the last 2 years linearly, I think is going to be a mistake, especially for investors, as they will miss out on opportunities in China or on companies that are exposed to both. I think that US and China geopolitical rivalry will deepen, will continue. It will be a relationship fraught with tensions. And with Joe Biden as a president, those tensions might even get worse. And we can talk about that in the Q&A. However, there is sufficient empirical evidence from history and from political science theory that a multipolar global context, when there isn't one or two clearly dominant powers in the world, a multipolar global context tends to favor some form of globalization and trade. Let me show you the chart on the left, very important chart for this argument. This is late 19th century, early 20th century trade between France, Russia, and the United Kingdom and Germany. So this is German's trade with France, Russia, and the United Kingdom. France is purple, Russia and the United Kingdom are yellow and gray. As you can see, right up until the start of the war, trade continued to accelerate. Now, is this because policymakers in the 19th century were stupid, as opposed to our enlightened leaders in the 21st century? The answer is no, they were not stupid. They knew exactly what was going on. The United Kingdom was engaged in a naval race from 1905 onwards with Germany. There was clear foresight that it would end in a war. The reason they kept trading one another is because allies couldn't control each other and they didn't trust each other. France, United Kingdom, and Russia could not trust each other to abrogate trade with Germany. So they had to keep trading so as not to leave money off the table. This is precisely what I expect to happen in the 21st century. The United States, Europe, Japan, South Korea, Australia, and New Zealand are actually not allied enough. And what I mean by that is that there's no single clear hegemon to kind of punish all the allies and slap them on the wrist when they trade with the quote unquote enemy. So this is not a Cold War at all. The United States is not overwhelmingly powerful as it was in 1950s and 60s when it established the Cold War system, and you will see a lot of cheating going on. The best example of this is, last week or 2 weeks ago, China and Europe signed an investment treaty. Now, it's not that big of a deal, but it shows you that American allies will continue to do business with China. If the US was going to abrogate trade in, let's say, airplanes, let's say US and China have a breakdown and America says, hey, no more Boeings. Are you really going to bank on the French president saying to the Chinese, no more Airbuses? I would bet a lot of money that that would not happen. So this is actually going to force the United States to continue to trade with China and vice versa. And it means that even as geopolitical tensions deepen, it doesn't mean we have a full breakdown and uncoupling. I think in the current context, that's impossible. If the US and China were overwhelmingly powerful, if they were the only two countries that really mattered, then I would have a different view, but they're not. Now, what about the Middle East? So, for the last 10 years, I was kind of like, meh, doesn't really matter. Don't worry about it. I think actually right now, there's a little bit of a consensus around that. So this is a very simple chart. We take this from Bloomberg. This is just basically story count. Bloomberg has a great function that you can use where they basically look at terms and topics reflecting risks. We put a number of terms that we kind of curate ourselves. I've used this in the past. Generally, I like it. It makes sense. But right now, the sort of these terms that just signify risk to oil exports out of the Persian Gulf are basically at the lowest in 16 years. I think this is a mistake. I think the Middle East is going to struggle with this whipsawing US foreign policy between Obama and then Trump and now Joe Biden. And I think the tensions here are now real. I think there's too little attention paid. The United States is mentally checking out of the Middle East and has been. The Trump 4 years are kind of an aberration on what is a secular reduction in US interests in the region. China is not willing to pick up the slack and act in this role of defender of last resort that the US has done. And that creates a pocket of instability that I think all markets are going to express through some geopolitical risk premium over the next 12 months at least. Now, the final paradigm is probably the biggest. And I have 60 seconds to describe it, so I'll just touch on it briefly. I call it the race to zero. Let me put it this way. If it was up to Al Gore, Bill Gates, and Greta, if it was just up to them to solve climate change, we would all die in 80 years as a race, as humans. I think we would all boil alive. In other words, if it's up to normative sort of arguments for why we should do something, we would not do anything. I'm a pessimist. I'm from Eastern Europe. I don't think humans have the ability to kind of look far out. So my view 12 months ago was that we would reach hothouse Earth scenario, and that in 2100, it would be big trouble. I've changed that view over the last 12 months. Maybe this is the one thing you could say COVID-19 has changed. Why? I think that if you think about the things I've been talking about right now, populist macroeconomic policy, where there's a demand for nominal GDP growth, US-China tensions and rivalry, I think the one way that all of these things fit together is in a race to zero, race to new technologies that will make things like alternative energy widespread. Why? Because there's need to stimulate the economy through infrastructure growth. This is a great way to do it. And this race in technologies is not just about saving the planet, it's also about sovereignty and geopolitical rivalry. Think about, for example, resources. China is increasingly becoming addicted to Middle East oil. As you can see on this chart, Middle East is becoming larger part of their energy bucket. China does not intend to contend with the US Navy over the next several decades. It's too expensive to do so. It's much more feasible and better for the country if it boosts its alternative energy production. At the same time, China dominates graphite production, cobalt production in Congo, EV production, batteries. And so there's going to be sort of an EV gap that America will have to respond to, whether Americans believe there's climate change or not. What I'm trying to get at is that this isn't about saving the planet anymore. The race to zero and the race to efficiency and sustainability now has political and geopolitical underpinnings, which is why my level of confidence that one, we're going to resolve climate change issues is much higher. But two, I think that these technologies are going to be adopted much faster than people think and are therefore the investment thesis of the decade. So I'm going to stop there. I went 60 seconds over. I think that's okay. And I'm ready for Q&A. Let's do it.